Hey everyone! Welcome back to Ponzi Scheme Investments, your go-to channel for all things stock market. Today, we're diving into a hot topic, advanced micro devices, or AMD. They've recently surpassed Intel in size, thanks to a booming GPU business and skyrocketing AI demand. But here's the kicker: despite all this success, AMD might actually be overvalued. Stick around until the end, where we'll discuss a surprising risk that could change everything for AMD. Now, let's break it all down. First off, let's talk about AMD's positioning. AMD has built a strong portfolio, especially in high-performance computing and cloud services. Their MI300X accelerator is giving NVIDIA a run for its money. And let's not forget, AMD's EPYC CPUs are now competitive with Intel's Xeon series, especially since Intel has been struggling with some voltage issues in their 13th and 14th gen processors. So, how's AMD doing financially? The company saw a 9% year-over-year increase in revenue, hitting $5.8 billion. Their data center and client divisions are strong, but their gaming and embedded segments took a hit. Even with these gains, AMD's current share price seems overhyped, especially when compared to NVIDIA. Now, let's break down AMD's financial performance. Despite their impressive revenue growth, their earnings are still not enough to justify their $230 billion valuation. AMD's gross profit grew by 17% year-over-year, thanks to a 3% increase in margins. However, their operating income is only $270 million, leading to an annualized earnings per share, EPS, of 64 cents. That puts AMD's P/E ratio at over 200x, which is sky-high. Looking ahead, AMD's outlook shows continued strength, but also highlights the challenges in justifying their valuation. The company is guiding for a revenue of around $6.7 billion with a gross margin of 53.5%. While these numbers are promising, their EPS growth remains weak. AMD needs to hit $20 billion in earnings to justify its current valuation, which is a tall order. So, what does this mean for AMD shareholders? Despite a tough 5 months, AMD still appears overvalued. The tech market can be volatile, and companies often fall harder than expected when they are overvalued. AMD's current growth rate doesn't show a clear path to the earnings it needs to justify its valuation. Before we wrap up, if you're enjoying this breakdown, don't forget to hit that like button and subscribe for more insights into the stock market. Now, let's get to that surprising risk we mentioned earlier. While AMD has a massive addressable market and has done well competing with Intel in CPUs, their ability to become competitive in GPUs is still uncertain. This uncertainty could severely impact their long-term shareholder returns and their ability to grow into their current valuation. That's it for today's video. AMD has some impressive assets, but its high valuation poses risks that investors should be wary of. As always, do your own research before making any investment decisions. Thanks for watching Ponzi Scheme Investments. See you next time.